Unbiased Trades here, and today we're going to be going over why I have been looking into futures. This is just a kind of introduction into futures, what I have learned recently, and some of the pros and cons between small caps and futures. By no means is this a full comprehensive, I've been trading futures for 3 years or something review. This is just an introduction, so just to allow you to explore futures as well and get some baseline ideas from me. So first, small cap pros and cons. So the pros on small caps is that it has quite a lot of edge. So yes, edge isn't always easy to find, but on small caps there are some great resources on edge. There's a lot of amazing traders in the small cap community, and a lot of them provide a lot of their edge for free or for quite cheap, to be honest. So that has, there's quite a lot of edge in small caps. Some great mentors. This kind of ties in. There's some amazing mentors like Justin Flynn, Jay Trader, and many more. There's not many more. There's a couple more that are very good as well. Also like free resources like the Short Bear, Day Trading Zoo, Systematic, Sovereign, and many others. But there's a lot of good people in the space. Lots of ideas, at least from what I've seen. A lot of them get posted on Twitter. A lot of people are always asking questions. And also with small caps, it's quite easy to create ideas because there's a lot of different factors. There's dilution, there's price action, there's gap percentage, there's the systematic side of it, there's time frames, all those kind of things. There's a lot of them. They do overlap into futures, but not all of them. And then also there's like the story of the small cap, like the news and all that kind of stuff you could look into if you wanted to. So lots of ideas in the space. Simple criteria can create very good results. So one example is if you just shorted anything that's above 100% gap, with I think about a 20% stop, you would be profitable pretty much. It wouldn't be an amazing strategy. You'd have to go through some drawdowns and everything. But that's simple, very simple criteria. And you can be profitable kind of from it. So that's what I'm meaning. You can create very simple strategies. Cons. Now there's halts. Halts is something I hate personally. I do not like halts. Leaves me very, unexpected. If it's a news halt, then that's pretty crazy. Statistically it does work in your favor if you're shorting, but it can be crazy. So yeah, halts is definitely number one con. Then evolving traps. The traps don't really stay the same, so your edge might disappear quite quickly. This does overlap into futures, but I think futures, to be honest, from what I've looked through my data, is it does evolve, but it definitely doesn't evolve as much as small cap. Small cap changes a lot, and there's definitely different market cycles for small caps. Now you have locate fees. This is also kind of tied into other fees with broker fees. It's quite expensive, small caps, to be honest. If you're shorting, if you're going long, then it's pretty good. But if you're shorting, it's quite expensive. PDT or Trade Zero. So you either have a choice of putting a lot of money into a PDT account, and then you'll get access to better platforms and a better broker overall, or you could go for like Trade Zero, or I think there's Smeg, and I think that's about the only other small cap kind of broker. So you've got pros and cons with both of those, but it's overall a con. You don't want to be having to put in that much money to trade, and you also don't want to go with something that's more subpar and gives you a really bad platform, for example. Also, not many platform options. You can't really, I think with interactive brokers you can do Sierra charts, but apart from DAS and Sterling, there's not many other options, and can be low liquidity. It can be hard to not expand your trading, but more for the theory of constantly evolving the size you trade. It can be difficult. There's new challenges when you trade with bigger size in small caps. Next, just a small thing about futures. Now, I've only just started my journey into a systematic future strategy, and however, these are just some pros and cons I've already noticed. Does not mean this is a full guide or anything, and all the things I've noticed. I bet I will miss things or change things in the future, but at my current state, this is what I think about futures. Now, futures pros and cons. The pros are it's low margin, very low margin accounts can exist for futures. Whether that's a good thing for the trader is a choice, but overall it is a pro. It gives you opportunity to try this for very low margin. Great broker selections. There are many good brokers in futures. You got NinjaTrader, you got Iron Beam. You can even use interactive brokers for futures, and Amp Trades. There's a lot that promote a good amount of competition and promote very good low fees and commissions. You can even get fixed spread futures brokers, which is incredible. So yeah, there's many good broker selections. Great risk controls. Most of these platforms do have risk settings, like in DAS, where you can set your max loss. You can set your max size on a certain market. So very good risk controls. Lots of liquidity. Now, most markets do have great liquidity, such as ES, NQ. I think crude oil does sometimes have good liquidity. It does depend on what market you're trading, but at least the main ones, very good liquidity, and you can size up quite a lot. You can be trading easily 20 contracts during intraday, main day, like market action. Now, it can also be fully automated using something like NinjaTrader, which I am doing. Makes it pretty simple, to be honest. You can code on NinjaTrader if you want, but a lot of it you can just do with options they give you, and it's very good. You can pretty much create a fully automated strategy by yourself with not too much code if you're going very simple, but you will need code if you're trying to do a more complex one. Now, cons, at least from what I've noticed, there is way more noise. So news definitely does affect the overall market if you're trading like ES or NQ. So that is something you need to be aware of. Very different price action to small caps. This is still something I struggle with personally. On small caps, you'll see, it rejects a level and it fully fades and just fades for the rest of the day. ES is not like that. It makes sense why it's not like that, because it's the overall market and a lot more things tie into it. But you need to be prepared for that it will reverse so much. It will fake you out so much. And it just ties into the next point. It does fake you out a lot. There's a lot of reversals, a lot of fake outs that you need to be prepared for. Next is more criteria are needed for strategies. I have found with ES and NQ, you can't create such a simple strategy. They are possible, but it means you're going to have a way bigger drawdown, because unless you're trading micro contracts, ES is a fixed amount of money you're losing per point per tick. Whereas on small caps, you can change your size to one share, and it's a very small amount, right? But on ES and NQ, it's a price per each tick, and even if you're trading only one contract, you'll still lose that size. There's no way you can downsize unless you go into micros. So those are the main pros and cons for futures at the moment. Now, I will be continuing with small caps and futures as I am more experienced in small caps. However, I can see there is a lot of opportunity in futures as well, and I encourage you to look into it. This isn't just because the market's been slow, because personally for me, my strategy's still been doing very good on small caps. I'm just someone that I don't want to be putting that much money into a PDT account, and I also don't want to be sticking with TradeZero for that long. I do hear there's like more opportunities coming, I think next year, for smaller brokers. But at the moment, futures is looking very interesting and it can be very profitable. So I definitely recommend you check it out.